Hey, what's going on, guys? Welcome back to another FWA trading course for you guys. So today I want to talk to you guys about stop hunts and how do we trade them, and how do we not get caught out by them like the average retail trader. So these are very, very different to liquidity grabs and fake out. These are actually wicks that hunt your stops. So the one I'm going to be talking about today is this here. So this is a big, big, big stop hunt, massive big wick, and then a big push down. So this is the example that I want to share with you guys today. And the reason I actually wanted to do this course, because from experience, a lot of courses, communities, whatever it may be, they'll always show you picture perfect trades. And trading isn't ever as simple as that. At times, trading can be very simple, yes. But what about the times when it's not? You need to be prepared for that. So I want to share this with you guys to get you prepared for all possibilities that come through the markets. So this is going to be a really, really good example. Pound Aussie has been in this downtrend, and we want to catch this move to our next key level, coming down to 175. So how do we do that? So let's do first things first. Let's find a key level here. So we got this support, break, a little bit of consolidation, break. See this? See how these bodies couldn't close above this, showing it's a very, very strong level. And then what I also found, which I'll show you guys on lower time frames, is this counter trend line coming here. We had this 1, 2, 3, and we didn't break it here, but on lower time frames, we did have a big stop hunt. So what we also have is a level of resistance here. And this is actually a trade that I took. This is why it's one that I'm excited and happy to open and share it with you guys, because I took shorts here, price pushed down, I went break even. I also took shorts here, price pushed back down, and then price came up and actually stop hunted me, which is very, very frustrating. And stop hunts are frustrating, but I want to show you guys what we do and what most retailers don't do is when we get stop hunted, we don't just kick ourselves and go, oh, well, we missed the trade. We don't do that. We look to get back involved and take advantage of these stop hunts. So here, this was just simply, as we can see it now, it was just consolidation. We were just chopping, and ready to make the next big move. And most of the time, when we have these stop hunts, it's usually followed by a very impulsive move that catches a lot of people off on the wrong side, which is why it can be very, very frustrating if you miss these. So let's go down to lower time frames and fully show this for you guys. Okay, great, guys. So now down to the hourly time frame. So I want to show you guys my actual positions. So I had this level of resistance coming all the way along like this. You guys can clearly see. It's a very, very nice level of resistance, support, resistance, support, break, resistance. Okay, and this is where I started to look short. So I didn't go short here. I waited for that rejection, impulse, correction. And then this is where I took shorts. I had my stop loss above this high. And then if you follow the risk management plan I say to you guys is once we hit a 1 for 2, we secure 50% and then we go to break even. So this came down to a total of 3.8%, let's say. So this is what I did. So I'd secured 50%. So I took a short position here. Well, that's a bit too big. Oh, it's wrong tool. Okay, so I took a short position here. I didn't take a short here as I wanted that rejection, little correction and impulsion. And then I also went short again here. Okay, so after we were still rejecting this key level of support and resistance, nice level of liquidity. And I then just cleaned it up and I just had like this, saw some really, really nice rejections. And then I also drew this trend line coming on like this. So I had this coming down. So I took a short here, got stopped at break even. I took a short again here. And then this hunted me at break even because we pushed down, 100 pips. So I had already secured 50% and gone to break even because my risk management plan allowed me to do so. And then this is when I had this trend line coming on down here. So I didn't go short here. Why? Because I already had shorts here. So let me just draw it on just so we can see. So I'm short here. I think my stop loss was maybe just a few pips above, and I was looking to play this down, or maybe it was maybe I had it above there just to be safe for the purpose of this. So this was my real position, looking to play this down and then push down really, really nice, respected the trend line. This is when I saw this 1, 2, 3. And then we came back up again and we had this little fake out. And this was a liquidity grab fake out. And then bang, this was the stop hunt. So this wasn't the stop hunt. This was the fake out. This big wick here was the stop hunt. And this will happen. Okay. And it's how you deal with this and how you come back from these stop hunts, because I didn't get stopped out at break even and then just go, oh fuck it, well I'm just gonna miss this trade, move on. You don't do that. We wanna look to see how we can actually now take advantage of this stop hunt. Now that we've had this stop hunt, we can expect that we're going to have a very, very impulsive move very, very soon. Okay, guys, so let's look at this in more depth. So I think a lot of retailers also would have got short here, which would have made this an even bigger stop hunt. They probably would have had their stop loss, let's say 20 pips below, looking to catch the next jackpot trade. And if I did go short here, once we'd had this pushback down, at this point here, I'd want to be at break even again, because I know that this, although this didn't actually spike up these highs, this could have easily spiked up, taken out these highs, and then pushed back down. So I think a lot of people would have got stopped at break even from shorting from this double top region, as did I. But what makes me different to most other retail traders is I'm not greedy. I'm looking to secure 50% once I hit my 1 for 2. And then when these stop hunts happen, I'm not emotional. I'm going to get back in. Okay. So, and that's what happened. I didn't short here, but if I did short here, once we pushed down, just for the purpose of showing you guys, if you did take shorts here, after we push down, once you hit 2%, you want to secure 50%, go to break even. So this position stopped at break even. This position stopped at break even after this big manipulative candle. And also look at the way that we broke out, retested. I think a lot of people then would have looked to jump in longs. But what would make us want to go long is if we actually close above these highs and we actually take out these highs, and then we have the retracement, and then we want to go long. But this, for me, the way that we rejected, we had this big wick to the upside, big wick to the downside. So all this simply was a level, sorry, a region of consolidation. That's all it was. Once we get rid of the trend lines, we get rid of stop and reverse, all this is just a range. And when we have these ranges, we can expect that we're going to have some sort of manipulation. To be honest, I did expect that we would take out this high and have our kind of liquidity grab, but we didn't actually do that. We had this break back below. We had this wick where we stopped out a lot of people here and here. And then this is where we look to get involved. Okay, so we've been stopped at break even. Let me see. Let me just get this on. So I've been stopped at break even here, and for the purpose of this video, let's just say here. But the beauty of this, I wasn't just stopped at break even. I'd already secured some profits. I secured some profits here once this pushed down, secured some profits here. Once this pushed down, you would have wanted to secure some profits here and gone to break even. So I think a lot of people who don't have the risk management of securing 50% once you hit your 1 for 2, after taking 1, 2, 3 break evens, they'll be very, very emotional and very, very frustrated. Or if they did go short here, they would have been stopped out, and then price is going to manipulate massively. So how did I know that this was a stop hunt and this wasn't a break and retest to go higher? Well, it's a good question. And the way that I know that is the way that the body closed back below this trend line, respected it, and then pushed away. Okay. So once we had broken back below, I simply re-entered. I re-entered here. My stop loss was above this manipulation, looking to play this down to our next key level. And that's how you do it. Whenever we have these stop hunts, once we break back below whatever it is that we may be trading. So in this example, this trend line, once we break back below and we can see we're respecting it, we don't want to be emotional. We don't want to say, oh, well, I've just been stopped out here. Let's say if we took a 1% loss here, I've just been stopped out here. Oh, fuck it. I'm going to move on. I'm done with pound Aussie. We don't do that. We're not emotional traders. We simply trade what we see. And what we can see is, think in terms of, where's the retailer? What is the retailer thinking right now? Because that's all I did here. I thought a lot of retailers would have been stopped out here. If retailers have been stopped out, that's a good indication that we're going to have an impulsive move to the downside. Once we have these stop hunts, then we have these impulsive moves. If we had a stop hunt to the downside, then it would give me an indication that we're going to have a big impulsion back up. But we're in this small correction, moving in this downtrend. So once we broke back below, retested, this is where I then went short, and I simply played this down. And this is a good example, guys, because this is the position I actually took, and played this down to the next key level. So if we just, let's fast forward this on. So look how impulsive this move was. Okay, and let's look at this on the 4-hour time frame. And this is the importance of, when we have these stop hunts, you need to be on the ball. You don't want to be emotional, because after we've stopped out, all retailers, we move very, very fast with no sign of being able to let them have retracements to get back involved, because the market's very, very liquid and it moves very, very fast because it stopped out a lot of people. Okay, cool, great. So look how impulsive this move was back down. I think a lot of retailers would have even said, look, here's a level like this. Once we break, I'm going to look to get involved with the retest and push back down, but we didn't have it. Why? Because we had such a big stop hunt that the market is very, very liquid and has this huge push down. So on the daily, this would be very, very bearish as well. And then bang, look, came down, came into our target, and then had a massive gap up. So total of 7.8% on this trade. And let's say if we took a 1% loss here, say you went short here, maybe stop loss was above, but for you guys in the community, you should know that your stop loss should always be above this high. So this wouldn't have actually stopped you out. But let's just say we took a 1% loss here. We don't get emotional. We stick to our plan. We trade what we see. And now we've just made 7.8%. So minus the 1% for the purpose of this video, 6.8% in a matter of a day. One day, 6.8%, one trade, absolutely fantastic. So stop hunts are very, very key. The importance is, if you do get stopped out, you do get stop hunted, this is completely normal. Stop hunts are very, very frustrating. I get that. They frustrate me a lot, especially when I took 1, 2, 3, 3 break evens. Although I secured some profits, let's just say I took 3 break evens. It's very, very frustrating, but you have to keep your emotions in check and you have to be on the ball. Don't let these stop hunts confuse you. Recognize that it's a stop hunt. Recognize where a retailer is going to be trading. Has this just stopped out a lot of retailers with a fake out? Remember, this was we're going back down to the hourly. This was like we'd already had 1, 2, 3. So 3 touches. Once we came back up here, we expected we're going to have some sort of manipulation, because anything more than 3 touches, it makes us a little bit skeptical, because we're going to have some sort of fake out, some sort of manipulation. And retailers who don't understand these things would have been stopped out by this, and they'll be very, very frustrated. So guys, that's essentially stop hunts, and more importantly, how to trade them. Or you might not want to trade them, and that's okay. It's all about finding what works for you, and finding your style of trading. But the main thing that will help you is, if you do manage to take these positions, is the confidence to actually execute this position. So many people, after seeing this, would have been so scared. Even if this was news, this probably was news. They would have been so scared. But look, the technicals still worked out very, very nice, and it will help you so much with your confidence to execute and stick with your direction, because you are correct. If you said short from here and to play down to this next key level, just because we had this stop hunt candle doesn't mean you weren't correct. So don't doubt yourself. You were still right. Still take advantage of the opportunity. Don't see this and then go, oh, well, maybe now we're going to go up, or maybe just do it. Just trade. Just execute a position and see how it goes. Have your stop loss in place. The reason we use the stop loss is, if it's a position of where we admit to the markets that, look, okay, we were wrong. Okay, so you go short here. You don't hesitate. You don't think, what if? Oh, well, I should have gone short here. Stop loss above here. Or I should have gone short here. Should have gone short here. All these things that you could have done. Don't worry about all the things that you could have done, and actually trade what you can do right now. And this is how you can catch 7.8 came down to a total of 8.7. It was an absolutely beautiful, beautiful trade, and a really nice way to show you guys how to take advantage of a stop hunt. So that's pretty much it for the stop hunts, guys. That's how we trade them. How do we know it's a stop hunt? Once it breaks back below and respects, and then we get involved with the move, we risk off the highs, and then we look to play it back down. It's very, very simple. Don't let stop hunts frustrate you and take you off what you were actually originally looking for. Just keep doing what you're doing, trade what you see, not what you think. Once you see your technicals getting respected after such a stop hunt, just execute the position. Don't be scared out like every other retail trader.